if you look at Beyond Meat and what's going on in the world, right, obviously there's been a secular shift in health and wellness. People want to feel better about themselves. People want to upgrade their diets as well as what they put in their body and on their body. And so I think, the adoption of plant-based is getting more and more mainstream by the day.
Sure.
And I think if you use an analogy, right, dairy category, for instance, right, is a $16 billion category in the U.S., and the plant-based adoption for that category has been about 13%, so 2 billion or so. Meat is the largest category in food and beverage, about 270 billion alone in the U.S. If you extrapolate, and 1.4 trillion globally.
Okay.
So if you extrapolate the same type of adoption that's happened in plant-based milks, right, and dairy, that's potentially a $35 billion category in the U.S. alone, and 180 billion globally if it can get the same adoption.
All right, so that gives us a sense of why investors are salivating, Leslie. I can't resist because some of these puns today. With this priced at 25 last night, it's not profitable yet.
Nope.
And now it's one of the few companies, because you go back over the past decade, as you were pointing out, there's really only a handful that have ever doubled on their opens. Why this company, given the economics?
So I spoke with some sources close to the matter that had a sense of what was kind of driving some of the book building. The range that they priced at the high end of was one that they had actually boosted from the initial range that they had sought. I'm told there was a lot of price insensitivity from investors. They did not care what this thing was coming out at. I was told that it was 30 times oversubscribed at the first range, 30 times oversubscribed at the second range, and all of the investors who had basically given their indications of interest at the first range, not a single one defected with the second range. So you're seeing, I think, a big reason for this is because you've got a lot of retail and consumer investors who are used to slow-growing, kind of stodgy food, retail, consumer companies. And here's a company that's got its top line growing, doubling every single year for the last 3 years. Signed up with Burger King. They see the potential for other partnerships. It could be a takeover target as well.
Was that impossible, or was that beyond? Well, let me bring in Aditi. Aditi, actually, you have some reporting that gets right to the heart of this. Beyond Meat might have an incredible category and a great growth story, certainly revenue growth story, but there are a lot of other players in this space, right?
Yeah, and there's some fierce competition out there filled with big-name backers that are all going after this $1.3 trillion global meat industry. Beyond Meat's biggest current competition is, as you mentioned, Impossible Foods. It's valued at just below $1 billion. The plant-based Impossible Burger will soon be available in all 7,200 Burger King restaurants. It's already in 7,000 restaurants worldwide, including Red Robin and White Castle chains. The company says it's ramping up so quickly, it's having trouble meeting demand. Now, both companies have high-profile investors, but Beyond Meat also has a roster of celebrity backers to help evangelize the brand. Those celebrities include Leonardo DiCaprio, Snoop Dogg, and Lindsey Vonn. Now, one of Beyond Meat's investors, though, Tyson Foods, pulled out of the company recently after announcing it will be creating its own plant-based proteins. And another competitor down the road could be Memphis Meats. It's backed by Tyson and Cargill. It's created meatballs, duck, and chicken using starter animal cells in a lab. They intend to bring those products to market, but Kelly, we're not sure what the timeline is for those products coming to market.
So, Brett Thomas, let me bring you back in on this, because anecdotally, Brett, people will say, you know what, the Impossible Burger's better. And is Beyond Meat sort of the lift to Impossible's Uber? In other words, can it compete in a category once consumers know all of these offerings and start to pick their favorites?
Yeah, I think so. Listen, the numbers we talked about, how big the category can be, I don't think there's going to be one player here, right? This is transformational. At Cavu, we always look to back category creators. Beyond Meat is the category creator here. They've got a huge first mover advantage over competitors like Impossible and others that will come to market. So, if you take a restaurant they're in, A&W, for instance, in Canada, their same-store sales grew 10% quarter over quarter based on them offering Beyond Meat on the menu. So I think that first mover, if you're an A&W, why would they switch you out, right, if the brand is working and you're able to produce, great sales?
Could McDonald's be next, Brett?
There's rumors out there. Obviously, Burger King went with Impossible. McDonald's is still out there. I think it kind of forces their hand potentially at some point. So I think McDonald's will add something to the menu, and so we'll have to wait and see.
Leslie, meanwhile, I'm sure the underwriter. Well, here's an interesting question. First of all, Beyond Meat has left a lot of money on the table.
Sure did.
They presumably could have raised twice as much funds as they did last night. Is that going to be a competitive problem for them as these other ones start to come to market? And I'm sure the underwriters are going to say, look what they did. You guys can raise a ton of dough.
I mean, here's the thing. The use of their proceeds for this IPO, a lot of it is going directly into R&D. So if you're talking about a pop of it, last I checked, it was up 125 or so. That's about $300 million that you've left on the table, theoretically, that you could therefore, pump into R&D or hire better engineers and better chefs and other people to create these products. So, you know what? They're still making a lot of money off of this deal, but there's always a little bit of FOMO when it comes to these things.
Oh, sure. Brett, you have a huge portfolio of companies like this. Do you mind going out on a little bit of a limb and telling us who you think might be next to come to the public markets, and if this might accelerate the move to go public by a whole host of brands?
100%. I think it will. I think traditionally, consumer hasn't been a big avenue for IPOs, right? Small and mid-cap growth, right? Especially in food and beverage. I think you've got to go back to Annie's, really, is kind of the last big one that was high profile with a great CEO, John Forker. I think this will open the door, I think, as an opportunity and outlet. Again, as your point earlier, there's a lack of small cap, mid-cap growth consumer stocks that are out there and investable. So when something comes along, right, that has high growth, it's really appealing to the buy side into the street in terms of entering into it. So I think this path will continue. I think you saw Chewy's filed, right, which is obviously was acquired by PetSmart, and they're spinning that out. Not profitable. And I think going back to Beyond Meat a little bit, they actually have a path to profitability. So it's not just a concept stock that doesn't have a path to profitability, right?
Sure.
They had 26% gross margins in Q1.